Hi, it's Ken Kraetzer for CBSI Services and CBSI Talking Business. All to highlight our great team. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry, and we are celebrating our 50th anniversary under the leadership of our founder, Bob Conti. Now, we have a special interview today. We're very pleased to talk with Kim Snyder, who's the CEO and founder of KlariVis, which is located in Roanoke, Virginia, a data company and a new startup in recent years, and one we've heard a lot of great things about from the ICBA think tank Accelerator program, which helps grow fintechs that are very valuable to the banking industry. Kim, good to see you. How are you doing today?
Ken, I'm great. Thanks so much for having me this morning. I really am looking forward to the conversation.
So are we. Kim, maybe you've got a long history in banking and in data management. Why don't you tell us a little bit about your career and how you decided to be a founder of KlariVis?
Yeah, so it's an interesting journey. I landed in the banking space, the community banking space. I would say, relatively early into my career, probably 10, 12 years out of college, and fell in love with community banking. Drank the Kool-Aid every day, just loved my bank, loved everything we were doing for our community and so forth. Our bank sold in 2015, and I had the opportunity to figure out what my next chapter was going to be with that transaction. And I decided to start a consulting practice, and because I wanted to stay in the community banking space, and I had worked for a startup company prior to joining the bank that I worked with. So I had a little bit of the entrepreneurial bug, if you will. So I started a consulting practice focused on the community banking space, and was very blessed to convince 10 of my colleagues that worked with me at the bank to come do that with me. We spun up a practice focused on 4 primary areas in the community banking space. And through our work as consultants, we saw this data problem everywhere we went. And so I truly thought it was a small community bank problem. We were about $1 billion in assets, not quite, when we sold our bank. When we were working with banks 5, 6, 7 times our size, and I continued to see the frustration with data, the amount of manual work that was happening inside of these organizations. Didn't matter what size they were, didn't matter how big they were, didn't matter how sophisticated their tech stack was. Everybody had the same problem. That's really what compelled us to try to figure out a way to solve it, and that's how KlariVis was born.
Very good. And your company does data analytics and visualization. Tell us about that. The services you provide to your banking clients.
Yeah, no. So what we do is we automate a lot of the manual report writing that's going on inside of an organization. So we'll come in, ultimately where we want to sit is in the center of a bank's tech stack. We want to pull data from all the various data sources that, believe it or not, a community bank can have customer data living on 15 or 20 different systems because the ecosystem has just expanded exponentially. And I don't see that changing. If you go out and you look at the number of fintechs in the space, right, in the banking space today, they're just growing phenomenally. So gone are kind of the days of the banks being all in with one core provider. Most banks are going out and trying to find solutions that serve their customers the best. And so what that creates is this fragmented data sources. What we do is we bring in that data, we normalize it, we aggregate it, we present it back to the bank in the form of business intelligence. And so everybody from the CEO all the way down to a branch manager, somebody in operational areas can come in, they can see what they need to see to do their jobs more effectively. We're empowering them with self-service access to data, and it's really becoming a game changer for our clients.
Very good. Now, tell us a little bit about what aspects of banking that this will support. I've been involved with a lot of acquisitions, but also retention campaigns. And also you have different customer segments within a bank. You may have consumer, you've got commercial, and other groups and other types of loan products out there. What are some of the customer segments that you're able to support?
Yeah, all of them, believe it or not. It's an enterprise solution. And so because, again, we're bringing in the data from all the various systems, everyone in the organization has access to the information that they need to do their job specifically. It doesn't matter if they're on the lending side of the house, consumer or commercial, if they're in the branch and they're serving retail consumers. If they have a digital arm, we can access that data. As long as we can access it, we can bring it into to KlariVis and provide that holistic view of what's happening inside the organization. And really, Ken, what we're finding is that our banks are telling us that KlariVis is now becoming an internal communication tool across their organization because everyone is seeing data the same way. The conversations now are more about, okay, how do we utilize the information that we're seeing to better our bank, to better our customer experience, to improve the products and services that we're offering across all business lines, rather than all of their time trying to figure out where does the data live and how do we put it together in a way that makes sense.
Very good. Now, we've had the opportunity to talk with a number of community banks and community bank leaders from the Independent Community Bankers of America. And they all talk about trying to keep up on technology with bigger institutions and it being a challenge with limited resources and some cases expertise in managing data for banks. How do you help banks and the community banks through that challenge?
Yeah, so I think that's so critical. And one of the things that I love about the ICBA Accelerator program is that banks can come in, they can spend a day and they can see, 10 to 11 different companies all through the course of a day and figure out, do any of these fit within their strategic plan, their strategic priorities. It's not a huge resource drain on the bank to understand what's out there for them to take advantage of. And they have to do that because otherwise they don't have the big R&D budgets, right? That they can go and expand and try to innovate and do these things individually. After all, they're trying to run a bank. And so where KlariVis comes in is on the data strategy side and on the enterprise reporting side of enabling a bank to see what they need to see about their business, really streamlining their operations, finding efficiencies across the organization. They can partner with a group of bankers. That's the beauty of our team, is we're a group of core veteran community bankers. So we've lived the pain, we understand it. And a lot of the cohort companies that were in the Accelerator Think Tech with us, while they may not have been bankers, they're doing the same thing. And so if a bank has a strategic priority, if data is a strategic initiative for the organization, then KlariVis would be somebody that they would want to check out, right? If improving their online account opening solution for commercial loans is a solution that they're looking for, that's their strategic priority, then ICBA and the Think Tech Accelerator has a solution for that too, and they can help them there. So I think it's leaning into the fintech ecosystem and figuring out what fits your needs best. So you're not just throwing a ton of money down the drain, basically trying new things.
Hey, you mentioned Wayne Miller's program out in Little Rock, Arkansas, that you participated in this spring sponsored by the ICBA, the Think Tank Accelerator program at the Venture Center out there in Little Rock. And understand your company received an award on the demo day, the MVP for your team's collaborative approach to serving your clients. What did you learn out in that program? We've heard wonderful things about how productive it is.
Yeah, it's a fantastic program. And Wayne and his team do a phenomenal job administering the program and really with both the fintechs and the banks walking through it. So we learned quite a bit. Number one, that the data challenge is real. So we validated, that this is a problem that banks are trying to figure out and solve from all banks of different sizes. So that was very beneficial for us. Our team approached the program really with a team approach. So my entire executive team was involved in almost every single meeting that we had with the community banks across the 12-week program. We met with 3 banks a day. And I was probably one of the only companies, or at least I was told I was one of the only companies that brought the entire team to the program. And I did that for 2 reasons. Number one, I really believe that because I was a banker, right? doing business with an early stage company, right, there's some risk associated with that. And so in my world, like if I'm going to go and find an early stage company back in my banking days, I want to see who's behind the company. I want to see not just one person, right? I want to understand the breadth and depth of the expertise of the management team. And so we brought our, as I said, our executive management team almost to every single meeting. On the flip side of that, which was what was awesome for us, is that our non-sales executive team members had the opportunity to engage with community bankers as well. And so that was really, really good because they were starting to hear the feedback, and it wasn't through my lens that I was feeding them. Hey, I'm hearing this from my prospects, right? They were hearing it firsthand and had the opportunity to engage with the bankers. And the learning that came out of that program for us as a company was phenomenal.
Well, that's terrific. And fintechs are an emerging area. We're hearing so much about different companies and the role they play supporting banks. We heard at the New York State Independent Bankers Association meeting the concept of partnerships, banks, and fintechs. Why have fintechs become such an important factor in the banking industry?
Yeah, so I think because the core systems, right, the core providers, they're legacy tech systems. It's really, really hard to take a huge ship and turn it. And so I think the big systems that are out there, you know, they do, you know, certain things extremely well, but banks are wanting to be more nimble. They're needing to be more nimble with the environment that we're in, right? Amazon has changed the way consumers buy goods and services, and banking is trying to catch up with that. And so these fintech providers that are out there, and there's two kinds, right? There's the fintech solution that really works on the front end of the customer facing system and are directly interacting with the consumers of the bank. And then there's the back end, those folks like KlariVis who are really helping with an operational efficiency perspective and helping the bank improve their overall customer experience because they're helping the bankers, they're empowering the bankers to be better bankers, if you will. So I don't see that changing. I see more and more opportunities evolving. I do think, and this is a conversation Wayne Miller and I had not too long ago, that you know, we could start to see the number of solutions like the online account opening solutions or the lending solutions or whatever, start some consolidation there. And I don't disagree with him. I think that that's probably going to happen in the future because there's just so many different online loan origination systems and so many different, you know, deposit account origination systems. However, I don't see the fintech phenomenon going away. I think that the banking system needs it. The community banks have to have the ability to innovate and using the fintechs that are starting up in the space is allowing them to do that and allowing them to be competitive.
Absolutely. And talk with Kim Snyder, who's the CEO and founder of KlariVis, based in Roanoke, Virginia. And Kim, maybe tell us a little bit about being an entrepreneur, some of the challenges of starting the company and managing its growth. And I know you're on a very tight schedule.
Yeah, no. So it's been an interesting journey, and I'll tell you, you know, we were very blessed because the way we birthed KlariVis, if you will, you know, we had a year-long proof of concept phase with that where we engaged with some of our community bank consulting clients to help us try to figure out the right path to go down with this proof of concept that we were creating. And so we did that. And when we came out of that, that was at the end of 2018, all of the banks that had engaged with us through that process said, gosh, we really want what you have. And this is going to be phenomenal. It's going to be a game changer. So I had some confidence, right? I had some market acceptance, if you will, before I went and spent a lot of money and set up a separate company. So I set up a separate company in February of 2019 and engaged a firm to help me take that proof of concept and turn it into reality. Because keep in mind, Ken, I'm a CPA. Okay, I've never written a line of code in my life. Okay, that's not my background. And so we spent about a year, and those consulting clients that we had, they were so phenomenal. What was just so beautiful about the whole thing is they gave me their data to build out the ingestion process. Had that not happened, we wouldn't be here today. And the reason for that is because they trusted me. I had become one of their trusted business advisors over the course of 3 or 4 years as I was working with them, helping them on other projects. That's a benefit that a lot of startup founders don't have. Okay, they just have an idea and they just go down the path, and they don't have that luxury, if you will. So all of that was great. We launched our product in the first quarter of 2020, and we launched it to great success. Like, we had a tremendous marketing campaign, tremendous outreach, lots of trade shows that we participated in, and really lots of excitement about our product. And then COVID happened.
Yeah.
So if you want to talk about a challenge, okay. And I, like everyone else, I'm like, okay, everybody's going to go home for 2 weeks, right? Because that's what we thought back in March. And then, okay, that 2 weeks became 4, and then the 4 became 8. And then I'm sitting there saying, oh, okay. So all of the sales that we thought we were going to have, now banks are trying to figure out how do they go remote? You know, how do they work with closed branches? Like, they became so internally focused, PPP. So all of that traction that we had coming out of the first quarter just basically dissipated. And I had to make a tough decision. Are we going to lean in or not? And I chose to lean in. And again, timing is everything. I think had I not launched the product to such great excitement in the first quarter, that would have been a tough decision for me to make. But what we did is we went out, we raised outside capital at that time, and we actually more than doubled the size of our company and brought our entire engineering team in-house. And we made the decision that when we came out of the pandemic, our product was going to be substantially more, you know, and it have more in it. We launched it with a minimum viable product. So we came out with, we made the decision, we're going to lean in, we're going to spend the money we need to spend, we're going to hire the people we need to hire to do the things that we wanted to do during the course of that time period without the sales. And that was not an easy decision to make. Okay, that was startup founders, entrepreneurs, they have hard decisions every day. That was a tough one. I don't regret it for a minute. It was absolutely 100% the right move, because when we relaunched in the fall of last year, and then we went back to those same trade shows this year, I can't tell you the number of banks that, number one, came to my booth and said, oh my gosh, I'm so happy you survived the pandemic. Okay. And number two, your product, you did exactly what you told me you were going to do 2 years ago. And so we built a sense of credibility in our platform and in our processes and in our product evolution during this time period. And I think that's why we're getting the traction that we're getting today. Long answer to your story, but it's just, you know, sorry.
Well, that's great. I mean, we've heard from, you know, all over that if you could learn to pivot during the pandemic to do what it took to take care of your customers. I mean, community bankers had to do that on a dime to handle the Paycheck Protection Program loan process. But you build tremendous customer loyalty, and you build integration into systems by being able to work during a challenging time. And it's great to hear how you thrive during the pandemic and are growing your company. And just maybe a final thought for us on why banks should give you a call to look at your services at KlariVis.
Yeah. So, you know, if you're struggling with data, right? If you have a lot of manual spreadsheets in your bank, if you have not timeliness of reports, if you're looking for information and you're trying to find a partner to embark upon that data journey, call KlariVis, call me. We'd love to have a conversation. The thing about data is it's a complex topic, but you don't have to boil the ocean. You can put some water in the microwave and heat up a cup of coffee, and you'll be surprised at how much better your overall bank operations can be with that kind of an approach. So we'd love to have that conversation and show you how we can partner with you and help you bring clarity and visibility to your data.
Well, Kim Snyder, CEO and founder of Roanoke, Virginia-based KlariVis. Thank you for joining us on our CBSI Talking Business, and continued success to you and your team on building your company.
Thanks so much, Ken. It's been great chatting with you, and I look forward to hopefully meeting you in person very soon.
Look forward to that. And this is Ken Kraetzer for CBSI. We're based in Harrison, New York. We provide insurance-based benefits to the credit card, payment, and fintech industry. And we'll look forward to doing this again. Thank you for watching. Have a great day.